All right, good morning. It's kind of time to get going. We're missing a couple folks here, huh? It's like every team's missing one team member, huh? Way to go. Man, Kaylee told me she was going to be gone, though. She had emailed me, so Nick, I don't know. Alex, she's sometimes running a little bit late. Sometimes running a little bit late. Is that the nice way to put it? Who do you guys think won? Where's Aaron?
The computer.
Huh?
The computer. Yeah.
You think the computer won?
I think Digby was a solid.
Okay.
Digby or Andrews was close.
Digby or Andrews?
That's what I call.
Who you guys think won?
I think we got it.
Oh, we hear from Team Ferris. We didn't hear from them in the practice rounds, really. So, How about the Baldwin? Who do you guys think won?
I don't know.
No guesses, man. Well, let's go take a look at what happened, I guess.
Nice fair stick. That's what I thought was the RS.
We'll take a look here. I got another cold coming on, so I don't know how long my voice will last today. We'll see. I don't want to infect Garrett either because he's got to stay healthy for another. Oh, announcements, yes. We've got men's basketball tonight at Rocky. So if you're going to get there, you might have to leave after class or whatever and cruise on down to Billings. It's about a 4-hour drive and go support your lights. If not, you can listen to it, I'm sure, on KPQX. Skylights tomorrow at 7. Yep, tomorrow at 7. So right here at the Armory. So go and support your Skylights. And then wrestling takes off today. Later today, Garrett?
No, earlier tomorrow morning.
Early tomorrow morning, like at 3 in the morning or something goofy. So yeah. You can follow the wrestling too pretty well on different websites. I usually just go to the NAIA and then they got a national championship thing or something. You got to search around a little bit, but then you can kind of follow it. You can actually pay and watch, get streaming coverage of it if you're interested in that. I don't think it's all that bad either, like $10 for the whole tournament or something. So if a person's interested, you could do that. So, so good luck anyhow. We got Molly here for the Skylights tomorrow night and Garrett taking off for the wrestling. And the matches start Thursday?
Friday morning.
Not until Friday? Okay. Well, let's see what we got. ROE. There's only 2 teams that have positive ROE, so only 2 teams made money then, obviously, right? Team Digby, the computer team, and Team Ferris. Of those 2, Team Ferris had the higher ROE, so that's pretty good. There are 3 teams that had emergency loans. And that includes Andrews, Chester, and Erie. So Baldwin, Digby, and Ferris did not. Sales, were pretty good across the board, really. Nobody really jumped out and took a huge amount of market share. 128 on the high end for Andrews. We'll see why in just 1 second. And low end was 106, so not a substantial difference there. Profits, again, as we saw above, there's only 2 teams that had profits. Of those 2, Ferris had the higher profit. So why did Andrews lead in sales? I would guess, okay, at this point it might be a bit of a guess, but look at their SG&A to sales. So they spent a lot of money on either R&D and or marketing, sales and marketing. Okay, and as did most teams. Okay, this was huge. I mean, you're starting to look at some numbers there. I think at the end of last game, we were getting down pretty much into single digits, around that 10%, let's just say, mark. And every team was really well above 10%, except Team Ferris, which kept it at 8.7. And yet they still had the second highest sales. Yeah, second highest sales. So much more efficient than and effective in their use of either R&D and or sales and marketing. We'll probably see that as we go down where they didn't spend money. In fact, let's buzz down real quick. If you go look at the big perceptual map, okay, where didn't they spend money? R&D, right? Okay. Everybody else really looks like they boldly try to move their products, keep them up, and Ferris is taking a different approach. Okay, we might be able to already start making some assumptions then about strategy. Okay, so they didn't spend a lot on R&D, which is a part of that SG&A, right? But also maybe in marketing too. We'll kind of have to see that as we go through the various segments. Yeah, so pretty even in terms of the market share. Contribution margins were pretty decent. For first round, Erie was the low at 27, and the high was Digby, our computer team, at 33. Ferris was over 30, but everybody else was, really pushing that 30 mark, and so pretty close for the first round. That's not too bad. Yeah. It's hard in the first couple rounds to really affect, that contribution margin a ton, unless you're going to raise your prices and not sell anything. You can have a big contribution margin, but not make money. So, stock market summary, we still see, interestingly, the first three teams, Andrews, Baldwin, and Chester, all sold stock, raised money. And I say that's kind of interesting. We'll see down below in the cash flow why I might say that. Digby and Ferris are two teams with profit. They didn't do anything with their stock. Erie, interestingly, already buying back stock. So, already buying back stock. And I was watching today CNBC and Marathon Oil. Okay, obviously the oil prices are way down, and they're having to sell stock in this down market in order to raise capital. Not a good thing to have to do, right? Okay, but oil's getting destroyed. Marathon needs to raise some money to increase their capital. They really don't have a lot of choice, but that's in a bad position, or bad position to be in. On the other hand, if your stock's down and you're expecting some pretty good growth, and you have an opportunity to buy back stock, yeah, we'll see. First round, hard to say. Their stock's down now, and everybody's stock went down except for Digby and Ferris. So. We see some borrowing here in the long term. Digby just a little bit. Erie borrowed quite a bit. Ferris borrowed some on the long term. Every team borrowed, it looked like, on the long term. Unless I'm missing something there. Digby the absolute least, but everybody else borrowed some in the long term. My guess is we had a decent amount of inventory. And that's just looking at the sales and those types of things. And if I come here, yeah, decent amount, not huge, but Andrews, Chester, and Erie, they all had negative cash flow due to inventory, so they made too much inventory. Basically, is what it amounts to for the type of sales that they ended up with. Ferris about even. Baldwin actually and Digby actually went a little bit the other way. So. Check in there. Okay, plant improvements. Yeah, we see, other than Team Digby, our computer team, everybody else made reasonably substantial plant improvements. This may be deceiving. This may be a good question to ask for your assignment. But this number for Ferris, while they're the smallest, it may be deceiving. Okay. You may want to start asking yourself why I might say that. So let's see. Remember, this number is a net number. Okay. Sale of common stock, we see that. Also buying back, purchase of common stock. So Erie spent $3.4 million in doing that. Dividends paid. We had 3 teams pay a dividend already. So getting rid of cash already. Long-term debt. Everybody issued some long-term debt. Really, only 2 teams borrowed short-term. 3 teams borrowed short-term unwittingly with their emergency loans, but 2 teams actually borrowed short-term. That's when I set up above. It kind of surprised me that they were selling stock and yet not borrowing money in the short term, which obviously would have been available. They should have been able to borrow. You guys are restricted, I think, as to how much you can borrow in the short term, but I think it's a fairly high amount, if I'm not mistaken. Which is cheaper, debt or equity?
Debt.
Yeah, just curious. So cash, 3 teams with cash. Ferris, nice job of cash management. Baldwin, pretty good. I mean, you always want a little cushion there. You want to be safe, but 5.6 million is not too bad. Digby, I'd say, has too much cash, but watch out. Maybe they'll invest that in some things this next round. Accounts receivable inventory. We saw some inventories, right? So we got Andrews, Chester, Digby, or Andrews, Chester, Erie, with some high inventories, which we saw up above. Plant equipment, accounts, anything special in there. I'm down to the income statement, and again, remember we talked about the SG&A up above. Look at that. We ranged from $34 million in SG&A. That's a huge amount, down to $10 million. So 3 times as much Team Andrews spent on SG&A, and they generated about $9 million more in sales. So about 7% more in sales. So 300% more in SG&A spending. Okay. Now, that's easy to say in one round, but that spending could lead to advantages going into the next round too. There is some spillover effect on that. Okay, so it's one thing you could sit here and gripe and complain about it and say how lousy that was, and it didn't turn out as well as maybe they'd hoped for this round. But there's going to be some spillover effect, and I think we'll see that too as we go down a little bit. So that's a huge amount. So I think at the end of last game, SG&A, we were getting some 20 millions and 25, 26 million maybe. We might have had some that popped up over 30 million, but that was after 5 rounds. This was round 1, 30-some million. And not just them, we got 22 million here for Baldwin, 19 million for Erie. So some pretty big amounts. Interest, taxes. What's your, that's what I was going to have you guys figure. What's your tax rate? You need to look it up, or can you figure it from here? You can look it up. It is in the guide, but can you just figure it from here?
Yeah. With their taxes and earnings before taxes?
Taxes and earnings before, yeah. Yep, taxes and earnings before taxes. Absolutely. I had to think about it for a second. So you know what your earnings were before taxes, and you know what your tax rate is, or your tax amount. You should be able to figure out what your tax rate is then, right? Because that may come up as a question on your guys' assignment for next week.
Will it be in the guide or no?
Hmm?
Will it not be in the guide, or will it?
It's in the guide. If you want to go look it up, that's fine. That's not going to be the question, what your tax rate is. It's going to be what might have happened to profits if they'd sold their potential. So you might have to actually go through and calculate what their sales could have been, what the price could have been, what the contribution margin could have been, and then how that would have been affected by taxes. Because Baldwin left a lot of money on the table, we're going to see, in several categories. Baldwin, ran out of inventory in 4 out of the 5 categories and left a lot of money on the table. In a couple of those are pretty close, but a couple of them they left a lot of money on the table, and so that could have been a big factor, right? So Team Baldwin maybe could have walked away with this if they'd have made a little bit more inventory in some of these. So otherwise, you see some inventory. Wasn't horrible. Nobody ended up with $60 million in inventory, and nobody ended up with a $70 million emergency loan or anything like that. But we see some inventory there. I always like to come over and check and see what's going on here. We see some changes in capacity. A little bit interesting. Again, I'm already trying to figure out what teams are doing strategically. Okay, and sometimes looking at this capacity thing. You got Chester. They reduced capacity a little bit here in the performance and size. Ferris reduced capacity here in the performance and size. Digby reduced a little capacity in the high end. That's kind of interesting. But we know what Digby's going to do, right? Because they did it last practice rounds. They're going to do the same thing. So, and we see some changes, some pretty reasonable changes here in automation. That's kind of interesting. Baldwin spent a lot of money on automation in the high performance and size. That's a little bit unconventional. How's that? A little bit unconventional. So, what's that? I mean, there's the plus. What's the plus for that? The main plus. Well, you're spending automation, you're increasing automation, so in the high performance size, what's your big plus?
The labor cost is
You-
lower.
You're going to save some labor costs. Yeah, what's the big negative now that you've just automated, increased your automation?
It takes a lot longer to do R&D.
It's going to take longer for R&D for those cycles. Okay, so they're maybe not going to be able to move their product as easily to keep up, at least until TQM comes in, right? And then TQM, you're going to have the ability to do some investing that can increase your cycle time, right? So it's, that's there's so many trade-offs in this game. So this is one of those cases where I don't know that it's either good or bad, okay, but it is a trade-off, and understanding those trade-offs and where that's going to leave your product, right, is a huge thing, okay. So you need to, that needs to be a part of your strategy. It needs to be a part of your tactics, and it needs to be a part of those things. Is just understanding those trade-offs that you're making, because most decisions are a trade-off here. If there weren't trade-offs, it'd be pretty simple, really, right? But there's just about always some trade-offs in here. So, we look at capacity. As always, the first round or two or three, all kinds of capacity, right? We just got oodles and oodles of capacity because our blue lines are just as long as our gold lines, and so lots and lots of capacity. Traditional segments, one of the segments where Baldwin left some money on the table. They could have sold, looks like, about another 4% or so. Okay, which 4% on 8 million, so 320,000 units at 20 whatever bucks a unit, 27 bucks a unit, 28 bucks a unit. Okay, so 320, 30 bucks, so the heck's that? 10 million. Gave up 10 million in sales there, right? Is that right? Yeah. Should be. Profit-wise then, earnings before, and then calculating the profit. Everybody's pretty good on the low end. Not a lot of potential. Looks like Andrews. Why did Andrews dominate the low end? If you want to call that domination, it's not a huge advantage there. What would you guys say?
Yeah, the product further ahead, same price.
Further ahead probably would make a hell of a lot of difference in the low end.
Price, I'm sure.
Price would make a big difference. Their price was amongst the highest.
Spent $2,900 on promo and $2,900 on sales.
Yeah, 5.8 million between promo and sales. Okay, 5.8 million between promo and sales. So that's huge, right? Okay, they spent just a ton of money, and even though they had a higher price, they were able to push it. Now that said, their December customer survey is kind of so-so. Okay, part of that might be age, right? Because their product's way too young for what the preference is. Okay. That their product's way out in front there, but that could be a real tactical decision. We'll see how that plays out. I'm going to be interested to see how Andrews plays this over the next 3, 4, 5, 6, 7, 8 rounds, or 6 or 7 rounds from now. So that could be a real tactical decision. We'll probably talk more about that when we get to about round 5 or 6. We'll see. Yeah, look at the differences in the money spent. It's unbelievable. Erie spent a lot of money too, though. $4 million there, and but they have a higher December customer survey. Age-wise, it's probably a big thing there. Pretty even in the high end. Not a lot going on in terms of differentiating. We do see in Ferris allowing their product maybe to not get as far ahead, and yet they still had pretty good sales there. Kind of taking advantage of it, even if it's sliding backwards a little bit. Andrews had the highest sales, but again spent 5.6 million, okay, in promotion and sales budgets. In this case, garnered a good December customer survey, right? Good customer accessibility. Price was again towards the high end. They actually knocked their MTBF down just a little bit. And age profile was pretty good, so they probably spent some decent money in R&D on here as well, I would guess, to keep their product pretty well moved forward. So, 5.6 in marketing and God knows what in R&D, right? $6-7 million on one product, maybe something like that's possible. Ooh, performance, Baldwin again. Now here they left a lot of actual versus potential, okay, or potential versus actual. So left a decent amount on the table here. I don't know if the numbers got 20, looks like about 21% actual, and they could have had about 28, so maybe 6-7%. 150,000 units at $40, $33. So yeah, not nearly as much money there, but still about 4 million or so in sales probably. They sold out big time. Okay, they spent the money here in this particular category, 4.7 million. So they spent a lot of money. And also had their product placed a little different. Okay, it's they've moved it kind of equally on the performance coordinate, but not so much on the size coordinate. But you're in the performance category, so they're kind of moving it out. If that makes sense, out on this side here. Okay. MTBF was the highest, and that's a big deal, right? MTBF on this one is a big deal, so that could be a huge thing. Location's important, price third, which isn't a big deal, so size. Baldwin had the biggest sales there, a little more potential versus actual. That's interesting. Okay, so you're looking at the perceptual map, and there's just one team, it looks like, that's not trying to be as competitive in terms of advancing their products. Every other team looks like there's a pretty good grouping there, decent grouping there, right? That's a little more spread out than I would have thought in the traditional segment. That's kind of interesting how spread out that is. And in the low end, just the one team that has pushed their product ahead for now. Wee bit and see what's going on there. So, okay, two of them here in the traditional segment. That's a little bit interesting. So now, who do you think won? What do I score on mainly? ROE and there's two big ones. ROE and what's the two biggest categories that I score on?
Contribution margin.
You guys don't look at the score sheet real well. I guess I'll just quit sending it out. Okay. Earnings per share is the biggest. Okay, earnings per share is the biggest that I score on. And then ROE. Okay. Team Ferris won both of those, beat the computer team, along with kicking everybody else's butt. Digby was second. It looks like Chester third in those categories. Contribution margin, the computer team and Ferris. So that's big reasons they are where they are. Stock price, Team Ferris had the nicest jump in stock price. And profits, Ferris and Digby again. Cash flow, Digby did well. Strategies, fine. 98.5 for Team Ferris there. We'll have to see what kind of discounts they might have gotten. They didn't have an emergency loan, so we're good there. But we don't know about the other one. So 98.5 is pretty good. 1.5 from perfect, really. No discount for emergency loan, although Andrews, Chester, and Erie all had discounts for emergency loan. Leverage, every team had a discount for leverage except Team Ferris. It's looking pretty good for Team Ferris, I'd say right now. And working capital, they did get a discount for working capital, so their working capital came in a little under 20 million, must have been. Baldwin's the only team that didn't have a problem with working capital. So our two losing teams from the practice rounds turned out to be first and second here, right? Yeah, first and second here in the first round of the competitive rounds. So I'm thinking they were just laying in the weeds for you guys. You know, they were kind of setting you up. You know, in the old days of gambling and stuff, they'd call that a hustle, maybe, you know, make you think that, yeah, make you think that they're no good, and, you know, and did they bet you guys any money or anything? They put any cash on, you know, the competitive rounds? Because that would be a true hustle if they were betting you guys, you know, some money that they were going to come back. So, must not have, huh? Man, I'm going to have to teach you guys a little bit about gambling. That's part of business, isn't it? Okay. So pretty good. Not too bad around. Anybody got any comments about it?
I expected pretty much what we did. The emergency loan was a little higher than I thought it was going to be. But
Could you guys have borrowed any more current debt? You didn't borrow any, so of course you could have. Okay. That's way cheaper than an emergency loan. What's an emergency loan cost you? Ooh, good question. Might have to make you look that up in the guide. See what an emergency loan actually costs.
it's usually on there. I'm not logged in, so I can't see.
Well, and it doesn't, I don't think there's any place on here where it separates it out, so you'd have to go look at the guide and see what an actual emergency loan cost is. It's extremely expensive.
It's not the same as current debt?
No, the rate might be, but you get dinged a processing fee for an e-loan.
I know it's pretty high on here. It's
Team
less.
Ferris has
We're
heard
on
from.
cloud 9, okay?
You.
For a long time. We can celebrate.
All right. Well, then you forgot to tell me, though, to announce that Thursday night at 8 o'clock, too. Go ahead, because you know more.
There's a swim party that the ambassadors are putting on at the swimming pool. And it'll be a lot of fun. It's from 8 to 10.
So down at the public swimming pool, which is kind of down by the police station, don't let that bother you. You know, the cops will probably not be around watching you or anything, so you're probably okay, right? So I'm sure they don't let booze or anything in there, though. So yeah. So swim party, that'd be kind of fun.
What's a swim party without booze?
Safe.
They got lifeguards for it.
Yeah. I'm getting too old for that. I
Oh,
tell you.
Byron, come on.
Yeah. Questions? Hey, like I said, my voice and stuff's about shot, so I know I went through everything. But I told you, too, as we go along, I'm going to go through this stuff quicker and quicker. So we'll go over assignments on Thursday, and obviously I'll have a new assignment for you on Thursday. What were the ones I said I'd have on there, maybe? Calculate taxes. I think since it's been a while since Team Erie's had to do an assignment,
Well, we had to
and
do one last week.
weren't they the ones that were complaining about the assignments being too easy?
Yeah,
Okay,
well,
speaking of that, you give me some leeway on that?
Because you're going to be gone?
Yeah, I got all my homework done before.
I never got leeway, and I was gone for 3 weeks in a row.
this is your gone for 3 weeks in a
Molly,
row.
So, you just need one day. There's a big difference. Like, I should be able to get it done Monday when we get back.
It's not due till Tuesday.
Yeah, that's what I'm saying.
Okay.
But on the off chance.
On the off chance, you let me know then if something comes up that is actually
Well, that's
absolutely
what you're
Just let you know.
preventing you. Well, if there is something that comes
Molly, it's
up
called communication, okay?
that
Try it.
absolutely
It's called a
prevents
due
you.
date.
That's it. You know what? Just because we're enemies in this class, we're partners in other classes. No.
No. We're gonna have a fight here. I hate to say this, but my money's on the wrestler for the fight.
My money would be too.
Yeah.
But let's go play like.
But I think you could outrun him,
I'll
and you could beat him in horse.
I'll beat you in horse.
Oh no, I
Maybe not a real
might.
game.
I might take that bet.
I'll beat you.
All right.
Biggest problem we're running into